What's up guys, welcome back to the new video. I'm your host Yash from Equitymaster, here to make markets simpler for you. Thank you for tuning in every week. Before we move on, please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. There's no opinion or view on any stock covered herein. With that disclaimer out of the way, let's get started. In today's video, I'm going to talk about the stocks that are trading below their book values. You see, Benjamin Graham, well known for his book The Intelligent Investor, is widely regarded as the top finance and investing guru. He is also widely known as the father of value investing. In the series of interviews that he gave in 1976, Graham boiled down the art of value investing to three simple rules, and one of those rules was the buying rule. As far as the buying rule was concerned, all Benjamin Graham wanted is that an investor should be reasonably confident that he is buying a dollar bill for 80 cents or lower. In other words, buying a rupees 100 note for rupees 80 or less. Now imagine there are two stocks. Fundamentally, both are decent companies and have a decent track record. However, the first one is available at a price to book value of 0.7x, while the other one is available at a price to book value of 1.1x. So, which one would you choose to buy as per Graham's rule? Well, it's an obvious one. It is indeed the first stock. This is because it is trading at a 30% discount to its book value. In other words, if the fair value of the company is its book value, then we are effectively getting a rupee 100 note for rupees 70. So, keeping that in mind, let's look at some of the Indian stocks that are trading at less than their book values. The first stock on this list is Autoriders International. Autoriders International offers luxury car rental services. It provides chauffeur-driven automobile rental services to individuals and institutions as well as local and international tour management services. As of June 2024, the company had a fleet of 422 vehicles including hatchbacks, sedans and SUVs. It's based out in Mumbai and has 8 branch offices in Ahmedabad, Bangalore, Delhi, Chennai, Hyderabad, Pune, Gurgaon and Kolkata. The company's latest book value stands at rupees 690. At the current price of rupees 143, this translates into a price to book value multiple of 0.2x. This suggests that the stock is trading at a relatively considerable markdown to its actual book value. The risk-reward equation also looks pretty attractive on the price-to-earnings multiple at 0.9x. Over the years, the company has shown consistent growth in revenue owing to its association with reputed customers. The growth is expected to be faster from here on as it has recently expanded into new cities. The company plans to increase its fleet size from the current 422 to more than 500 cars by the end of this year due to healthy traction from new customers and planned expansion of services in the Tier 2 cities. The management of the company also has extensive experience of 20 plus years, which bodes well with the existing customers. Moving on, the next stock on this list is Star Paper Mills. Star Paper Mills is an integrated pulp and paper mill. The company is part of the Kolkata-based Duncan Goenka Group. It produces a wide variety of industrial, packaging and cultural papers catering to almost all segments of the market. The company's latest book value stands at rupees 424. At the current price of 200, this translates into a price to book value multiple of 0.47x. This suggests that the stock is traded at a considerable markdown relative to its actual book value. From a historical perspective, the stock has commanded a median price to book value of 0.5x over the past 5 years. On the price to earnings front, the stock trades at a P multiple of 5.3 compared to its 5-year average of 5.8. During the pandemic and the following years up to 2022, the company faced headwinds. Waste paper prices and pulp and paper prices saw a steep reduction in global markets. The next 2 years were pretty good with demand nearing to pre-pandemic levels. Subsequently, the company posted a steep jump in its top line as well as its bottom line. The company has a long-standing relationship with reputed clients, namely Akshaydeep Papers, SK Impex, Raghav Trading Corporation, among other big names. The paper sector has started to show green shoots and Star Paper Mills, with its established position, could emerge as a clear winner. Moving on, the third stock on this list is Catvision. The company manufactures community antenna television equipment for providing cable television services. It also produces cable TV products such as modulators, combiners, optic transmitters, optic nodes, radio frequency amplifiers, power suppliers and splitters, and tap-offs of different functionalities. It caters to both the domestic and international markets. The company's latest book value stands at Rs 44. At the current price of Rs 26, this translates into a price to book value multiple of 0.6x. This suggests that the stock is traded at a discount to its actual book value. From a historical perspective, the stock has commanded a median price to book value of 0.4x over the past 5 years. If you look at the company's historical financials, one look would tell you that the top line and bottom line has remained shaky over the years. However, the sentiment is improving for the industry that Catvision caters to. It even received a big order in June this year after a big hiatus. The Ministry of Information and Broadcasting approved Catvision's application to downlink and broadcast ABC Australia channel. This channel is operated by the Australian Broadcasting Corporation, an entity of the Australian government. However, with this approval, Catvision now has exclusive rights to broadcast the ABC Australia channel in India for the next 10 years. This agreement is expected to be a major revenue generator for Catvision, bringing in approximately Rs 1 crore per annum. Moving on, the next stock on this list is Commtrade. Commtrade is in the business of commodity broking. It is a member of MCX or Multi Commodity Exchange and NCDEX. Commtrade offers selling and trading in commodities such as bullion, energy, metals, spices, oil and oilseeds. The company offers various services such as smart online trading platforms, expert research recommendations and so on. The company's latest book value stands at Rs 52. At the current price of Rs 33, this translates into a price to book value multiple of 0.7x. This suggests that the stock is traded at a discount to its actual book value. From a historical perspective, the stock has commanded a median price to book value of 0.6x over the past 5 years. On the price to earnings front, it trades at a P multiple of 1.3x compared to its 5-year average of 1.4. Over the years, the company has reported decent sales and profit numbers, but when there's a boom in the overall capital markets and the commodity market, it sees a stark jump. The company posted its best year in financial year 24 with net profit rising to Rs 17 crores from a loss of Rs 2 crores reported in financial year 23. FY24 is expected to be even better for the company as the sentiment around capital and commodity markets remains upbeat. Moving on, the last stock on this list is DHP India. The company manufactures various designs of LP gas regulators and its parts and accessories. DHP's products are used for domestic and commercial application, and it's mainly an export-oriented company. The company derives more than 85% of its revenue from exports while the remaining comes from the domestic market. DHP India's product portfolio mainly consists of propane regulators, butane regulators, LPG regulators, hose assemblies and brass fittings. The company's latest book value stands at Rs 725. At the current price of Rs 556, this translates into a price to book value multiple of 0.8x. This suggests that the stock is traded at a discount to its actual book value. From a historical perspective, the stock has commanded a price to book value of 1.6x over the past 5 years. On the price to earnings front, it trades at a P multiple of 90x compared to its 5-year average of 10x. The company also pays consistent dividends. Since 2013, it has consistently increased the payouts, with the latest FY24's payout coming in at Rs 4 per share. DHP India's top line and bottom line have also seen good growth over the past 5 years. During financial year 24, it incurred a capex of Rs 3.8 crores compared to Rs 11.3 crores in financial year 23. DHP India also has some investments in mutual funds which are worth Rs 169 crores. Apart from these above names, here are some more stocks that are trading below their book values. So there you go. These were just some of the stocks trading below their book values. Investing in stocks trading below their book values can be appealing, especially for those looking for undervalued assets. A high book value suggests that the company's assets are valued favorably compared to its stock price, which might indicate a bargain. However, you have to be able to separate the men from the boys, as there will be numerous beaten down stocks in the market where you'd be tempted to invest in the hope of making a quick buck. So tread carefully and avoid stocks where you are counting on to get lucky. No amount of analysis is going to help you here. On the other hand, even a little analysis on companies that have a strong track record and attractive valuations will go a long way in helping you achieve market-beating returns. Also, keep a long-term investing approach in mind. Majority of the shareholders and investors don't tend to think beyond 1 to 2 years. The moment a stock faces a few uncertain quarters, most of the investors exit the stock, which is why having a time horizon of at least 2 to 3 years helps you look at the stock from a different perspective. It will also allow you to have a contrarian mindset, which is very important in a field like investing. That's it for today, guys. Don't forget to like this video and share it with like-minded investors and make them smart as you are. Please do let us know your feedback in the comment section below about the choice of the topics, about the length of these videos, and whether we are keeping things simple enough. See you in the next one. Happy investing.